Hello, investors, and welcome back to Stocks Telegraph, your go-to source for insightful market analysis and stock recommendations. In today's episode, we're delving into a topic of utmost importance in today's economic climate: how to navigate the stock market during times of high inflation. As inflation rates rise, making the right investment choices becomes crucial to preserving and growing your wealth. In this video, we've hand-picked 5 stocks that not only have the potential to weather the storm of high inflation but also offer the allure of passive income through dividends. We'll analyze each company, its market position, and how it's positioned to thrive in an inflationary environment. So, let's dive in and discover which stocks could be your shield against the effects of inflation while offering a stream of dividend income. But before we jump into the first stock, do remember to subscribe to our channel and hit that notification bell, so you never miss an update on the latest market trends and investment opportunities. Also, for comprehensive market insights and in-depth analysis, visit our website at stockstelegraph.com. Now, let's get started with our top picks for navigating high inflation and aiming for growth and stability in your investment portfolio. Let's begin with Arbor Realty Trust Incorporated, traded under the ticker symbol ABR. As inflation looms, real estate often emerges as a valuable investment. Arbor Realty Trust is a real estate investment trust specializing in loan origination and servicing for multifamily, seniors housing, healthcare, and diverse commercial real estate assets. With a current price of $14.19 and analysts pegging a mean target price of $16.50, this right offers a potential upside. Arbor Realty Trust boasts a robust gross margin of 99.10%. indicative of its operational efficiency. Further, a healthy profit margin of 20.70% adds to its financial strength. A key metric to consider is the price-to-earnings ratio, which stands at 8.25 for Arbor Realty Trust. This reflects a favorable valuation in relation to its earnings. One notable aspect for investors seeking stability and income in times of inflation is dividends. Arbor Realty Trust doesn't disappoint, with an impressive annual dividend yield of 11.89%. This dividend yield provides an attractive opportunity for passive income, even in challenging economic times. In terms of recent performance, Arbor Realty Trust reported quarterly earnings of 57 cents per share, surpassing the consensus estimate of 47 cents per share, showcasing a positive earnings surprise of 21.28%. Over the last 4 quarters, Arbor Realty Trust has consistently beaten consensus EPS estimates, reinforcing its potential. With a focus on the thriving real estate market and a commitment to delivering value to investors, Arbor Realty Trust Incorporated presents a compelling option for those seeking stability and dividends during periods of high inflation. Stay tuned as we unveil our next stock pick. But before we do, don't forget to like this video and hit the subscribe button to stay informed about more potential investments. Also, head to our website at stockstelegraph.com for more in-depth analysis and market insights. Now, let's move on to our next inflation-resilient stock. Next on our list is Blue Owl Capital Corp., trading under the ticker symbol OBDC. Blue Owl is a business development company focusing on investment opportunities in middle-market companies across the United States. Currently priced at $13.40, analysts have set a mean target price of $14.94, indicating a potential upside for investors. This performance is reinforced by the company's growth over the last 12 months, standing at an impressive 25.99%. Financially, Blue Owl exhibits strength with a gross margin of 75.91% and a notable profit margin of 61.73%. The price-to-earnings ratio is an attractive 6.18, suggesting a reasonable valuation. For investors seeking income amidst inflation, dividends are a vital consideration. Blue Owl Capital Corp doesn't disappoint, offering an annual dividend yield of 11.77%, presenting an opportunity for passive income. In terms of operations, Blue Owl invests in the debt and equity of small to mid-sized businesses, providing critical capital and financial services. The company's extensive portfolio comprises investments in 187 companies, totaling a fair value of $12.9 billion. Notably, 98% of these investments are floating rates, adding a layer of stability, and 83% are in first or second lien senior secured instruments. Looking ahead, we anticipate third-quarter results from Blue Owl on November 8, 2023. However, reflecting on the company's second-quarter results, Blue Owl reported a significant net investment income of $394.2 million, marking an impressive 44% increase year-over-year, surpassing forecasts. The company realized a net interest income of 48 cents per share, outperforming the anticipated earnings. Blue Owl Capital Corp stands as a resilient option for investors during times of inflation, offering potential growth, dividend income, and a robust investment strategy. Keep watching as we uncover more stocks built to endure the effects of inflation. Don't proceed without showing some love. Like this video and hit subscribe to never miss our top stock recommendations. Our third stock in the list is Rithm Capital Corporation, trading under the ticker symbol RITM. Rithm Capital Corporation is a real estate investment trust focused on generating long-term value for investors through strategic investments in mortgage-related assets, including operating companies, with the goal of providing attractive risk-adjusted returns. Currently priced at $9.29, analysts project a mean target price of $11.61, indicating a potential uptick for investors. Over the last 12 months, the company has demonstrated a solid performance, boasting a growth rate of 25.71%. From a financial standpoint, Rithm Capital Corporation shows strength with a gross margin of 89.81% and a healthy profit margin of 35.16%. The price-to-earnings ratio stands at a reasonable 7.08, suggesting a favorable valuation for prospective investors. For investors seeking to navigate the challenges of inflation and potentially benefit from passive income, Rithm Capital Corporation offers an annual dividend yield of 10.76%. One of the noteworthy strategies employed by Rithm Capital to enhance its position in the market is its recent acquisition deal with Computershare Limited. The deal involves the acquisition of Computershare Mortgage Services Incorporated, the U.S. mortgage services arm of the Australian company, for approximately $720 million. This acquisition includes Specialized Loan Servicing LLC, a mortgage subservicer. The acquisition is expected to significantly bolster Rithm's portfolio, adding mortgage servicing rights totaling around $136 billion in unpaid principal balance, with a substantial portion being third-party servicing. Additionally, Specialized Loan Servicing's origination services business will be a valuable addition. Rithm Capital Corporation is making strategic moves to fortify its position in the real estate investment landscape, presenting an attractive prospect for investors amidst high inflation. For a deep dive into market dynamics, head to our website, stockstelegraph.com. Ready for our next pick that's resilient to inflation? Our fourth pick in this selection of stocks tailored to combat high inflation is Civitas Resources Inc., trading under the ticker CIVI. Civitas Resources is a company focusing on the production of carbon-neutral oil and gas, marking a notable commitment to sustainable energy practices. Currently priced at $72.39, analysts have set a mean target price of $94, signifying potential growth. Year-to-date, Civitas Resources has showcased a performance surge of 33.13%, reflecting its resilience and positive trajectory even in challenging market conditions. From a financial perspective, Civitas Resources maintains a robust profit margin of 32.80%, reflecting the company's ability to efficiently translate revenue into profits. The price-to-earnings ratio stands at an attractive 5.93, indicating a favorable valuation for investors. Additionally, for investors eyeing steady returns, Civitas Resources offers an annual dividend yield of 10.17%. One of the key moves reinforcing Civitas Resources' market presence is the recent strategic agreement with Benser Energy, a vital investment. This agreement entails the acquisition of oil-producing assets in the Midland Basin of West Texas, representing a significant investment totaling approximately $2.1 billion. The acquisition is expected to close in January 2024, with an effective date set at January 1, 2024. Civitas Resources Inc. is evidently making strategic strides to solidify its position in the energy sector, presenting a compelling opportunity for investors seeking to navigate high inflation with a sustainable and forward-thinking approach. Before we proceed to our final stock, ensure you've subscribed to our channel and hit the notification bell to stay updated on our top stock picks for combating inflation. Now, let's delve into our last inflation-resilient stock. Our final addition to the top stocks to invest in during high inflation is Equitrans Midstream Corporation, trading under the ticker ETRN. Equitrans Midstream operates in the energy sector, focusing on natural gas pipeline transportation and transmission services. Currently priced at $9.63, analysts forecast a mean target price of $11.22, indicating a potential upward trajectory. Year to date, Equitrans Midstream has demonstrated a commendable performance, boasting a growth of 43.73%, emphasizing its resilience and capacity to navigate market fluctuations even in challenging times. From a financial standpoint, Equitrans Midstream presents a gross margin of 62.40% and an impressive operating margin of 50.87%. These figures underscore the company's efficiency in managing its revenue and operations, making it an attractive prospect for investors seeking stability and growth. Looking ahead, Equitrans Midstream showcases a promising outlook with an anticipated EPS growth of 83.20% for the next year. Additionally, for investors seeking reliable returns, the company offers an annual dividend yield of 6.44%. Moreover, the company's operating margin of 50.74% surpasses that of a substantial percentage of companies within the oil and gas industry, showcasing its competitive edge. Equitrans Midstream Corporation positions itself as a robust choice for investors aiming to navigate high inflation while aligning with the energy sector's growth potential. That concludes our top 5 stocks to invest in during high inflation. If you haven't already, make sure to subscribe to our channel and hit the notification bell to stay informed about our latest stock analyses and market insights. Also, visit our website at stockstelegraph.com for comprehensive updates and in-depth market research. Thank you for joining us in this exploration of strategic investment options. Let's make informed investment decisions together.